Imagine turning a single dollar into millions over decades. That's exactly what Warren Buffett did. Warren Buffett, the Oracle of Omaha, turned small investments into a $100 plus billion fortune. He followed 3 simple rules for investing. Today, I'm going to share those 3 rules with you. In plain English, these rules aren't secret formulas. They read common sense ideas that beginners can use right away. By the end of this video, you'll see how to start investing the Buffett way. Rule 1. Start early and let time work. It's magic. Buffett always says time is your friend when you invest. The earlier you start, the longer your money has to grow. It's called compound interest. Basically, your money earns money. Then that money earns more money, and so on, like a snowball rolling down a hill, getting bigger and bigger. Buffett put it this way. Asterisk, we started with a little snowball on top of a very tall hill. That snowball is compound interest. It really adds up over years. Think of it this way. If you invest just a little bit regularly when you're young, even small amounts can grow huge by retirement. For example, putting aside $100 a month in your 20s can become tens of thousands of dollars by your 60s. Much more than if you start in your 30s or 40s. Even Buffett himself bought his first stock at age 11 and kept investing ever since. He's now in his 90s, still actively investing. By starting early, he had decades to let that snowball roll. Starting early also means being patient. Buffett believes in a buy and hold mindset. He famously said his favorite holding period is asterisk forever. When you buy a great business, think long term. Don't panic about daily market swings. In fact, he suggests, if you wouldn't be comfortable holding a stock for 10 years, you shouldn't own it for 10 minutes. So, rule 1 is simple. Asterisk, plant your money seeds early and give them time to grow. Asterisk, even if you invest small amounts, keep going and let compounding work its magic. Rule 2, stick to what you know. The second rule is, asterisk, only invest in businesses. You understand? Asterisk, Buffett calls this your asterisk circle of competence. Imagine you're playing a sport. You're great at basketball because you practiced it, but you know nothing about ice hockey. It would be risky to suddenly play pro hockey without practice. The same goes for investing. If you don't understand how a company makes money, that investment becomes very risky. Buffett famously warns, never invest in a business you cannot understand. In other words, do your homework. If you know the tech industry because you work in it or love gadget reviews, maybe you can invest in a big tech company. You research. If you enjoy fashion and follow clothing brands, maybe you understand retail businesses. But if biotech or cryptocurrency feels like Greek to you, don't rush in without learning the basics. Remember, asterisk risk comes from not knowing what you're doing. Stick to your lane. One practical way to follow this rule is to start by investing in companies or industries that you are familiar with. For instance, if you're a coffee lover and know Starbucks products, you might understand Starbucks' business model. You know people around you buy the coffee, so you can guess whether sales will be steady. That gives you confidence about that investment. If picking individual companies still feels overwhelming, Buffett also gives beginners an easy option. A low-cost index fund. He often says that the simplest, surest way for most people to grow money is by investing regularly in a broad index, like the S&P 500. That's basically buying a tiny piece of hundreds of big US companies at once. It's diversified and lets you own the market without needing to know every company. This isn't one of Buffett's 3 rules exactly, but it's his top tip for people who don't want to research stocks. Rule 3. Look for value and be patient. The third rule is about value and patience. Buffett isn't interested in hot stock tips or fad investments. He looks for great businesses at reasonable prices, and he holds them for the long haul. Think of buying a stock like buying a share of a business. You wouldn't dream of selling that share a week later, just because the market moved. Instead, you buy it because you believe in the company and you plan to keep it as the business grows. Buffett has a famous line. Asterisk. Far better to buy a wonderful company at a fair price than a fair company at a wonderful price. In other words, never pay too much for an okay business just because it's on sale. Instead, try to buy good businesses, even if you pay a little more, and then hold on to them. Another way he explains this is, asterisk price is what you pay. Value is what you get. Always ask yourself, what is the real value of the company's products, services, or future earnings? If you pay less than that value, you have a margin of safety. Here's a simple analogy. Imagine you see a high-quality smartphone on sale for a good price. You buy it and use it for years. That's smart shopping, but if you paid full price for a mediocre gadget and it broke a month later, you wouldn't be happy. The stock market is similar. Buy companies that are strong and selling at a bargain price. Buffett also advises us to tune out the market noise. When everyone is excited and stocks are skyrocketing, that's actually a time to be cautious. When everyone is scared and selling, that may be a time to be greedy and buy. He once said, asterisk, be fearful when others are greedy, and be greedy when others are fearful. So if the market crashes, Don't panic sell all your shares. Instead, check if some good companies are now cheaper than before. That's your buying opportunity. And when the market is in a bubble, don't get swept up. Protect your money by waiting for better prices. Conclusion: those are Warren Buffett's 3 simple rules for beginners. Start early and let compounding work for you. Invest in businesses you understand and look for good value with patience. Follow these and you'll be following the same smart path Buffett built his wealth on. Remember, investing doesn't have to be complicated. Start small, stick to what you know, and think long-term. If you found this helpful, hit the like button and subscribe for more easy investing tips. Comment below which rule you'll try first or share your own investing question. Thanks for watching and happy investing.